Okay, Megawell team, welcome back to the channel. Thanks for tuning into today's video. We're going to be taking a look at Bitcoin today and talking about the recent explosive move upwards from our symmetrical triangle consolidation we've had on the short-term time frame. We're going to talk about what this means for the macro, where we think the price is heading, what you should be doing now, and if the macro bullish reversal is actually in yet. And all of this information is going to be covered. We're going to cover it quite briefly, but also go into a bit of detail in other aspects. I want to keep today's video relatively short. Before you do get into it, go down to the pinned comment down below, click the link to our free Telegram channel. You can get access to all of our updates, market analysis, information, videos, ECT, a whole range of things in here. You won't miss anything if you're in this channel. So go ahead and join via the link below. And if you're interested in VIP, you can contact me directly to join our trading channel over here. Let's go ahead and talk about what's happening. So before we get into it, let's start with our macro. And I think I want to outline a few things on the macro because we've been telling you guys for weeks that 18K is the bottom, or at least a potential bottom point for Bitcoin, a point of massive contention, a point of resistance, a point of support, that has been relative for the last 9 years. This uptrending support line has been the exact bottom for Bitcoin, 2 previous cycles. And we do expect it to be again. And we've been preaching that, regardless of whether you think, we're going to head down lower, regardless of what you think's happening, be aware that this zone is not a zone to fade. It's a zone to be aware and potentially a zone to bounce from. And we've seen that, guys. We've seen 18K bounce. We've seen a 25% pump now from $18,000. And we've had our lower targets. We are aware that we can head down to 12, 10, 14K, but we are more bullish than bearish. I've been saying this for the last few weeks. We are more bullish than bearish, and you should have been more bullish than bearish because a lot of the information people are utilizing to expect, a continuation downwards is based on upcoming economic data. And the market can't price in upcoming economic data because it doesn't know what it is. So if people are assuming this information is going to be bearish, the CPI, interest rates, they're assuming it's going to be worse, it's going to be bearish, they're expecting the price to fall lower. And if it is worse, if it is bearish, the price will most likely fall lower. We're not going to lie. It will most likely go down to 12, 14, 10. We've been telling you that. What else we've been telling you is until we get that information, we have to assume we don't have it, and therefore the macro bottom could potentially be in. And that is exactly what we've seen play out here. It is exactly what we've seen. The majority, once again, was wrong. The majority, 90% of people were expecting the bottom not to be in and the price to continue downwards. And guess what? We bounced 25%. So even if the bottom's in or not, if you went against the majority, if you went against what everyone was saying, and you actually listened to the charts and you traded based on what the chart was saying, not what you think was going to happen from speculative data, which isn't announced yet, then you would have been correct. Okay, so let's take a look at what actually needs to happen for us to get this short-term reversal. So for a short-term reversal, a few things need to occur. We can't just have one indicator suggesting reversal. We need a few different things. We need a few indicators, moving averages, and we need trend lines broken. So a couple of things over there. First and foremost, let's talk about, our moving averages. Obviously, the 200-day moving average is that major moving average we do need a flip for us to actually confirm a potential bottom. You see that every single time we come down and retest this and we push back above it, we don't retest it again, guys. That is confirmed that the bottom is in. And that's happened on the last, 2 occasions. And of course, it could happen again over here. So breaking over that 200-day moving average will confirm the reversal, and we're very, very unlikely to come back and retest this trend line if we push over 200. Now, the 200 isn't the only thing, guys, and we're going to come back to this chart in a little bit and talk about a lot more, but there's a reason why I'm not overly bullish right now. And yes, macro, I do expect the bottom to be in around 18,000, potential dip to 16,500. We've talked about that, and my price target and time target was by the 11th of July, and we got obviously the 8th of July right now, so we've got a few days. But what I really want to stress is until we break over the 200-day moving average and close a weekly, until we break over this dynamic downtrending resistance zone that you see right now in the chart, we're going to show you these dotted lines. All right, we are not short-term bullish. We are not short-term bullish. Do not act short-term bullish. Do not over leverage yourself into longs over here. Do not be spot buying massively over here. We are not bullish. The price can still get rejected and head back down one more time. Okay, until that happens, we have to be acting accordingly. And again, be aware of that downside risk. Be aware that is a possibility. Be aware if the numbers come out in the 13th and they're really, really bad, we will head lower. Be aware of that. Don't act irrationally, act rationally. Wait for the information, then act. So right now, guys, I do expect a drop down from here. And I'm not even gonna lie, I don't even care what happens right now. It doesn't bother me. If we drop down from here, we drop down. If we go up, we go up. We're right either way. It doesn't matter. But what I do expect here is a potential drop down, some retracement over here. Obviously, rejecting from 200-day moving average is a big thing. I don't think we're just going to shoot, through the 200, through the resistance zone in one move. I think it will take a little bit of time. I think we might come down a little bit, push up a retest, or even potentially come back down to, $20,000 before we move back up. And I don't think it matters. Personally, I don't think it really matters. Your position should have already been entered. If you were going to long, you should have already. If you were going to accumulate, you should have already accumulated. This zone over here is not what you want to be buying. If you're buying over here, you're doing it wrong. You're setting yourself up for failure. All right, that's all I'm saying. So wait it out, be ready, be prepared, and wait for his reversal. So let's zoom out. Let's talk about it. What would happen if we do, first and foremost, get rejected from this level? If we do get rejected from this level, I do expect a move back down to this red line. So 20,500 will be our target. I think on the short term, that's a possibility. And of course, we still do have this uptrending support line that we are still, holding from this symmetrical triangle that can still extend as support. And if we do lose that level, we do expect a drop down back to $18,000. Now, obviously, this is speculation. This could happen. I don't think it will. It's just a possibility that we have to be aware of. At the moment, what everyone is waiting for right now is a break over here. Well, what we are waiting for, I don't know what everyone else is doing. I think everyone else is just aping in. But what we are waiting for, guys, is a break over here. Now, of course, we've been accumulating Bitcoin for the last few weeks. We initially accumulated at $18,000 on this drop. We sold at $21,000 for a 20% pump. We came back down. We've been accumulating again since down over here in VIP. We posted that. And then, of course, another 20% pump. So we're doing pretty good over here for accumulation. And I don't think I'm going to sell these off right now. I think I'm going to hold on for a little bit longer. If you want to take your profits, you can, but waiting for a move back over this dynamic resistance range is a go. So flipping short-term bullish happens over here. If we flip this range over here, we are short-term bullish. What happens next? We expect a move upwards to the next major resistance, guys, which is this red line or this downtrending resistance line on the macro. Let's zoom out. If we break that macro trend line, what do we think is going to happen? Well, we expect a move again to that next major resistance zone, which is this dotted, which is this gray zone over here, $36,000. From a rejection over there, we can possibly head back down. And again, if we push up, we expect 48. Now, 48 is the big number. 48K is what actually we need to break over for us to be macro bullish again. I'm going to go ahead and draw a line in. $48,000. This is what we need to actually reclaim and push over again for us to flip macro bullish, guys. And similar to what we saw over here, similar to something over here, that same similar pattern. We have this, this top area over here, we drop down, we push up, and then we clear that level. All right, so when we clear that level again, you see we clear that level again, that local high, that is when we go parabolic again. That is when we go into a rally. So we can clear that local high again. That is when we're going to start pushing up, gaining some momentum, and actually really going for it in the market and getting some proper bull market rallies actually occurring. Until then, it is just all relief. It is just a short-term move upwards. All right, that's about all I want to talk about today, guys. We're going to do a technical analysis, but I don't think there's any need. I really don't. I think a lot of the indicators are going to be lagging on this recent move. Obviously, this recent move happened very, very rapidly. It is going to be lagging. What I do want to bring up, however, if we go ahead and bring up our VPVR for a second, again, all my indicators have kind of disappeared, but I'll bring up my my starred ones, VPVR. Actually, they changed it to VRPV for some reason. I'm not too sure why. All right, we can see already, I haven't even adjusted it, but we could go ahead and change it to 200. I like to put 200 row side on my VRPV. We can see there's a huge gap, all right? Huge gap over here. You see this? And this will be reclaimed very fast. And that kind of confirms what we were saying before. If we do clear over this range here, we got that downward trending diagonal resistance, that zone, we have that 200-day moving average resistance zone, and we have $22,000 horizontal resistance. If we do clear that level, we will have quite an easy move upwards here to this range over here, whether we retest this horizontal level first, whether we retest this downward trending resistance first, it's hard to say for sure, but we will push upwards quite rapidly, okay? And that would constitute that reversal on the short term, of course, when this happens, and then breaking over here would constitute a reversal of the macro channel, all right? But for us to break and constitute a reversal of the macro pattern, so the macro price action, we need to break 48K, okay? Hope that sums everything up, guys. I hope that keeps it nice and simple. For the short term, of course, expect lower. I do expect 20,500, but I am aware of what needs to happen next. And again, big shout out to everyone who's been following us and been listening to us and You know, I copped a lot of hate, guys, for telling you guys that $18,000 was the bottom. You know, I had so many people tell me I was once again wrong, all the way down over here, telling me all these crazy things about, you know, why, you know, we're going to go to $5,000, $4,000 before you know it. But of course, stick to the chart, stick to the analysis, stick to the data, and you can see we predicted this very, very long ago. All right, very, very long ago, 11th of July. You can see it down over here. That was our predicted bottom. We've been pretty much dead on. So if you learn anything from this video, guys, is, you know, sometimes TIA doesn't work on a short term. It doesn't. Sometimes news events come out. Sometimes the price moves pretty sporadically, which we've learned in the last few days. But on the macro, guys, you can't fade it. Keep your trend lines, keep your support zones, act accordingly, okay? With that being said, guys, if you do want to support the channel, consider signing up to Bitget. Obviously, I don't make any money from this YouTube channel, but if you want to sign up to Bitget and trade where I trade, it's 0.2% market fees there, and I get a little bit of commission. So if you're interested in signing up to Bitget, go ahead down below, click the link, and we'll catch you in the next video. Okay, guys, so we're going to take a look at Bitget next, and I highly recommend signing to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up, and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say, for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to our reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.